Hi, Indianapolis. I'm Sarah Donaldson from Peak Real Estate Advisors. Thank you again for joining me for part 2 of my educational series for first-time home buyers. Today, we're going to talk about financing and pre-approvals. So, you decided to buy a home, you found a realtor that you like and trust. Next step is to figure out what your budget is, because you can't really buy anything without knowing how much you can spend on it. And unfortunately, most of us don't have several $100,000 just sitting in a bank account waiting to spend on a house. So chances are you're going to need to get financed through a bank or a lender, which means that you'll want to get a pre-approval first. So first question, just like before, where do I get started? How do I find a lender? Well, a couple different ways. You can go with your bank where you have a savings or checking account. A lot of people are very comfortable with that. If your employer has a credit union, a lot of people like to use a credit union. Or you can check with your trusty realtor who can refer you to lenders that they've worked with previously that they know do a great job. I personally have a couple different lenders that I like to work with. And just a little sort of tidbit, as realtors, we don't get any type of incentive. We don't get a kickback. We don't get a referral fee for sending you to a specific lender. So some people think, well, you want me to use this lender because you're going to get, an extra commission or something like that. Not the case. That's actually illegal. So when I am referring a lender to you, it's because I've worked with them before, I trust them, their customer service is excellent, they will get us to closing on time. So yeah, if all else fails, ask your realtor, go with your bank or your employer's credit union. So different banks and different lenders have different loan programs, different interest rates, all kinds of different products that you as the consumer can basically choose from or shop from. So it's actually not a bad idea to look into financing with a couple different lenders. Now, some people get a little bit squeamish when I mention this because they're like, well, if I, go through a couple different lenders, they're all going to run a credit check, right? Which means that every time my credit is checked, my score goes down and basically my score is just going to plummet and then I'm not going to look like an ideal candidate. Well, that's not the case. Yes, your credit score will get dinged, if you will, with that initial check. But here's a little secret that not a lot of people know. When you are going through the pre-approval process and you're checking with different lenders and checking with different banks, as long as your credit is checked for the same purpose within 30 days, your credit score will only get dinged once. So you can check out several different lenders, fill out several different applications, look at their various programs and loans. They can all check your credit, but like I said, as long as it's for the same purpose within 30 days, your credit will not get dinged multiple times. So definitely shop around, find the best option for yourself. So what does the pre-application or the pre-approval process look like? Well, it's pretty simple, really. It's just like any other loan approval process. You're going to fill out an application. You will more than likely need to provide at least last year's W-2, possibly the year prior, but for sure the previous year, some recent paycheck stubs. They're going to look at that information, run your credit, kind of evaluate your debt to income ratio, and then from that information, they will give you a budget. So that could be $100,000, $200,000. It really just depends on your income and the amount of debt that you currently owe. Keep in mind that your credit score plays a huge part in your chances of getting a loan approval. So if your credit score needs a little work, you probably want to address that first. And that's actually one really nice thing about going through the pre-approval process early on in your home buying adventure, is because sometimes there are things that pop up on your credit report that don't belong there, that should have been removed already, that maybe aren't even you. So it's a great opportunity to uncover those errors on your credit report and address those, get those removed, which sometimes can take a little while. Not all credit reporting agencies or debt collection agencies are super responsive when it comes to that. So knowing those errors ahead of time and getting those removed just improves your chances of getting that approval when you need it. Keep in mind that a recent bankruptcy can potentially hinder your ability to obtain a pre-approval and obtain a loan. If you filed bankruptcy within the last 2 years, chances are you're going to have to wait until that 2-year mark before you can actually get pre-approved or get a loan. Of course, one of the best ways to improve your credit score is to pay your bills. It's that simple. So if you have a high amount of credit card debt, or if you owe money to anyone, anywhere, the best thing you can do is to get that balance paid off as soon as possible, or at least make regular monthly payments. It's also a great idea to consult with a credit counselor and see what kind of advice they have. A lot of times your lender also can give you some tips on the best way to improve that debt to income ratio and in turn improve your credit score. I do find occasionally that people are hesitant to go through the pre-approval process because they are afraid of what's going to come back. They're afraid they're not going to get approved. They're afraid that their credit's not going to be good enough. But that's why it's important to do it early. Because like I said, if there are things on your report that don't belong to you, you can get those things taken care of. And if it turns out that your credit is not in the best place and could use some improvement, you can put together a strategy and get those things taken care of and kind of put together a time frame as well, so you'll know when you'll be ready and able to purchase a house. One thing that I think is important for first-time home buyers to keep in mind is that your rent payment and your mortgage payment are going to be two completely different things. Sometimes if people are paying a certain amount in rent, they'll kind of calculate in their head what that would average over a 30-year period, and they'll think, oh, okay, well that equals this amount, so that must be what my budget is. Well, not really. Your rent is just that. It's your rent. Your mortgage, however, your mortgage payment is a little bit different. The amount that you're paying towards your mortgage loan is not just going towards that principal loan amount. You're also paying interest, you're paying insurance, taxes, several different things factored into that. So that's another reason why it's a good idea to go to a lender and have them look at your income, look at your bills and so forth, so that they can put together a budget that actually works for you and your income. Knowing what your budget is key, because the last thing you want to be doing is looking at homes that are above what you're able to afford, finding out that you can't afford them, and then being devastated and not being able to find another house that measures up to that one that you really, really wanted but was out of your price range. Keep in mind too that sometimes this can work on the flip side. You might think you're only able to afford $200,000, but as you go through the process with your lender, you might be pleasantly surprised and find out that you could easily afford something for $250,000, $300,000, and then you can start looking at things that you thought you didn't even qualify for. Another reason why having a pre-approval in hand in this competitive market is so important is so that you can be just that. Competitive. The last thing you want to do is be shopping for houses, find one that you absolutely love, and then turn around and have to get pre-qualified in order to write an offer. That could take days, sometimes even weeks. And like I said, this market is competitive. Houses aren't lasting days and weeks lately. They're lasting hours sometimes. So you want to make sure you've got that pre-approval in hand so that you can assure that seller that you have someone who has sort of partially committed to funding this purchase for you, that you can stand by your offer, that you can close the deal. So bottom line is, start talking to lenders, start shopping loan programs, get your pre-approval, and start house hunting. Thanks for watching. For more information on the home buying process, be sure to check out other videos in this series or email me directly.